I'm your rich uncle. I want to see my family win. Follow my advice, and you'll be the rich uncle in your family.
Inflation is often described as a normal part of a growing economy, a background force that gently pushes prices upward over time. Most people are aware of it in a vague sense. Prices go up, money buys less, but few truly understand how deeply inflation affects their financial future. It doesn't arrive suddenly or dramatically. Instead, it works quietly in the background, gradually eroding purchasing power, distorting financial decisions, and undermining long-term wealth. Unlike a visible expense, inflation is subtle and persistent, making it one of the most powerful yet underestimated forces in personal finance. Today we will talk about how inflation quietly steals your future. So, before we start, make sure to hit the like button and subscribe to my channel. At its core, inflation is the rate at which the general level of prices for goods and services increases over time. As inflation rises, each unit of currency buys fewer goods and services. While this may seem like a simple concept, its long-term effects are profound. A small annual inflation rate, say 3%, can significantly reduce purchasing power over decades. What costs $100 today could cost $180 or more in the future, meaning the same amount of money will no longer provide the same standard of living. One of the most immediate ways inflation steals your future is by reducing the real value of your savings. Money sitting in a bank account that earns little to no interest gradually loses its purchasing power. Even if the number in your account remains the same, its actual value in terms of what it can buy decreases over time. This creates a silent loss that many people fail to notice until it has already had a significant impact. Wages often fail to keep pace with inflation, which further compounds the problem. While salaries may increase periodically, they do not always match the rising cost of living. This creates a gap between income and expenses, forcing individuals to either reduce their standard of living or rely on debt to maintain it. Over time, this imbalance can lead to financial stress and limit the ability to save or invest. Inflation also affects long-term financial planning in critical ways. Goals such as buying a home, funding education, or saving for retirement become more expensive over time. Without accounting for inflation, individuals may underestimate how much money they will need in the future. This can result in shortfalls that are difficult to recover from, especially later in life when earning potential may be limited. Another significant impact of inflation is on fixed-income individuals such as retirees. People who rely on pensions or savings without growth mechanisms are particularly vulnerable. As the cost of living rises, their income remains the same, effectively reducing their purchasing power year after year. This can lead to a gradual decline in quality of life, even if their financial situation initially seemed stable. Debt interacts with inflation in complex ways. On one hand, inflation can reduce the real value of fixed-rate debt, making it easier to repay over time. On the other hand, rising inflation often leads to higher interest rates, which increase the cost of borrowing. This makes loans, mortgages, and credit card debt more expensive, placing additional strain on individuals who rely on credit. Consumer behavior is also influenced by inflation. When prices rise, people may change their spending habits, often prioritizing immediate needs over long-term goals. This shift can reduce savings and investment, further weakening financial security. In some cases, individuals may make impulsive purchases to beat rising prices, which can lead to poor financial decisions. Inflation does not affect everyone equally. Lower-income individuals tend to feel its impact more strongly because a larger portion of their income is spent on essential goods such as food, housing, and transportation. When the prices of these necessities rise, there is little flexibility to adjust, making inflation particularly burdensome for those with limited financial resources. Housing is one of the areas most affected by inflation. Rising costs of construction, materials, and demand can drive up home prices and rents. For renters, this means higher monthly expenses with no long-term equity. For buyers, it can mean needing larger loans and paying more interest over time. This makes it increasingly difficult to achieve home ownership, which has traditionally been a key path to building wealth. Education costs are another area where inflation plays a major role. Tuition fees and related expenses have risen significantly over time, often outpacing general inflation rates. This increases the financial burden on students and families, leading to higher levels of debt and longer repayment periods. Healthcare expenses are also heavily influenced by inflation. Medical costs tend to rise faster than other categories, making it more expensive to access care. Without adequate planning or insurance, these costs can quickly become overwhelming and disrupt long-term financial plans. One of the most overlooked aspects of inflation is its psychological impact. Because it operates gradually, people often underestimate its effects. This can lead to complacency, where individuals fail to take proactive steps to protect their finances. The absence of immediate consequences makes it easy to ignore, even though the long-term impact is significant. Investing is one of the most effective ways to combat inflation. Assets such as stocks, real estate, and certain commodities have the potential to grow at a rate that exceeds inflation. By investing, individuals can preserve and even increase their purchasing power over time. However, investing also involves risk, and it requires knowledge and discipline to be effective. Diversification is an important strategy in managing inflation risk. By spreading investments across different asset classes, individuals can reduce the impact of inflation on their overall portfolio. This approach helps balance risk and return, providing a more stable path to long-term growth. Another key strategy is increasing financial awareness. Understanding how inflation works and how it affects different aspects of life enables individuals to make better decisions. This includes adjusting budgets, planning for future expenses, and seeking opportunities to increase income. Building multiple income streams can also provide protection against inflation. Relying on a single source of income can be risky, especially if it does not keep pace with rising costs. Additional income sources, such as side businesses or investments, can provide a buffer and improve financial resilience. Saving alone is not enough in an inflationary environment. While having an emergency fund is essential, long-term wealth requires growth. This means finding ways to make money work, rather than allowing it to sit idle and lose value. Inflation also highlights the importance of long-term thinking. Short-term decisions that ignore inflation can lead to long-term consequences. By considering the future value of money, individuals can make more informed choices that align with their goals. Ultimately, inflation quietly steals your future by reducing the value of money, increasing the cost of living, and complicating financial planning. It does not announce itself loudly or demand immediate attention, but its effects are constant and cumulative. Over time, it can erode savings, limit opportunities, and create financial challenges that are difficult to overcome. The key to protecting your future lies in awareness, planning, and action. By understanding inflation and taking steps to counter its effects, individuals can preserve their purchasing power and build a more secure financial future. This requires discipline, consistency, and a willingness to adapt to changing economic conditions.
All right, my future millionaires. That's a wrap for today. If you got some value from this, don't just sit on it. Hit that like button. Share this with someone who needs to hear it. And of course, subscribe to the channel so you never miss out on more money-making secrets. Turn on those notifications because wealth waits for no one. Stay smart. Stay hungry. And I'll see you in the next one. Let's get rich.